You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He's speaking to us from Arizona. Welcome back to the show.
Glad to be here, Jim. Thank you for having me.
Copper tariffs went into effect in the U.S., but just on processed raw copper, but copper products like copper wire, copper tubing will be hit with a 50% tariff. And how did the market on copper react to that?
Well, the copper stocks bounced a little bit. They were initially down, but, technically they hit a support level that I was looking at the chart. So whether it continues or just a little temporary rally, but in theory, a tariff like this is good for, copper companies, particularly ones that produce here in the U.S., because that means their product is going to be more in demand. So there's a subtlety about the different types of copper products and so forth. But, basically the stocks popped today, so I'm happy about that. And I was bullish on copper anyway. Freeport was one of our favorite stocks. So we'll see. There could be a little bounce and maybe back down again with the uncertainty, but it should be bullish for the U.S. copper stocks. Just like the tariff on steel, helped Nucor Steel and Cleveland Cliffs Steel, and I guess prior to that, U.S. Steel was going up before they got taken over. So it helps the domestic companies here. So we'll see how it all plays out. But I know Trump's trying to protect the industries here in the U.S. as best he can, I suppose. That's one of the tools he uses.
Yeah, now, apparently, Canada sends the copper that it mines to China to be smelted because there aren't a lot of smelters. Canada's only got one. The U.S. has maybe two or three. China's got all the smelters, so it takes a while to build one, I would think.
The lead time for a lot of these facilities, I know nuclear is many years. I don't know what it is for a copper smelter, but yeah, you have the pollution issues and so forth. China has less concern for that, as we know, and at least they say they are concerned. But they've been. If you visited China in recent years, you can experience some of the pollution there. So some of it tends to be nasty. So it makes more sense there'd be more smelters in China.
How's gold doing?
Well, it's pulling back, and I cautioned a little bit about that. The U.S. dollar index has been rallying the last few days, and that's putting pressure on the metals. They don't always work inversely. There are times where they track together, and this is what you got to be careful about. But my feeling was, gold was extended, and everybody's super bullish on it. We've had a huge move. The charts were saying there were some pullback numbers, potentially well below the market, and doesn't mean it's going to happen. And then the dollar started to pop here, and then we're starting to see the shares, pop off to the downside. I sort of warned in my newsletter, to clients to be careful here, because even though it might be a short-term effect, you don't know how nasty it could get, over the short term. And, certainly gold, has rallied substantially, and, with a top near 3,500, how much of a correction could you get? $200, $300, $400 maybe, anywhere in there is possible. So we're pulling back a little bit, but the fundamentals for the gold, particularly with the connection to the cryptos and to the treasury bonds and all the things that are being planned by the Treasury and I don't know if the Federal Reserve's involved, but probably so here in the U.S. I guess you got to maintain an overall bullish posture. It depends, obviously if you're trading or investing, but on a short-term basis, the trading stuff is a little negative.
The Fed has kept U.S. Interest rates the same. Is that good or bad news?
The street wants to see lower rates, but the bond market doesn't. It's like the Fed was, Powell was fired, or there was talk of this going back the last week or so, if you recall. The bond market, I'm talking about the Treasury bonds, the long-term bonds, sold off on that story, which means long-term rates went up. So the bond market is not too happy about, Powell being fired or rates suddenly being dramatically brought down, which is what the U.S. administration, Donald Trump and others would like to see. I have a lot of issues with the Fed in and of itself in terms of its very existence, for many, many years. There's so many aspects we can spend hours, talking about it. The bottom line is you got to watch long-term bonds, and the tail wags the dog, so to speak. And yes, the Fed's been mismanaged for so many decades, and under Powell in particular. But there's so many other aspects to the Federal Reserve. Besides the fact they're renovating their building, which was a bit of a story you probably saw last week, that they went over budget, and really extraordinary amount of expense at the taxpayers' cost to fix the building and renovate it. But their control of the money supply. You really need an audit of what the Fed does secretly. It does a lot of stuff. The entire discussion is about the Fed funds rate. If the Fed lowering rates or raising rates, we don't talk about all the other secret stuff they do, and there's a lot of secret stuff. And we need an audit. We learned under the Freedom of Information Act a few years ago that the Fed was investing in U.S. companies and bonds secretly. I think one company was mentioned, Harley Davidson, the motorcycle company, so what the hell was the Fed doing that? You know what I mean? They can argue they're trying to prevent some type of crisis in the motorcycle industry, I suppose. I don't know, but a lot of shenanigans going on. They control the M2 money supply, which from the readings that I see and the numbers that are coming out has not been going down. In other words, if the money supply has been contracting, which the Fed controls, that would be real negative for the economy. There's less money floating around, but they seem to be on a steady keel of keeping it up or slightly higher. So, and I suppose they get even more aggressive if there was some type of international crisis or a COVID type event, a black swan event or some other event. But we do a lot of stuff out there. The repurchase agreements with the banks. And one thing I do want to mention, it was brought to my attention by another analyst, but the real problem, people complain, well, interest rates are up and mortgages are high, at least here in the U.S. And when you think about it, it's really the fault of the banks. The banks are borrowing money around 4%, but they're charging, you name it, on mortgages and, of course, on credit card debt, a number's extremely higher than that. They're working on a huge spread. And, it's interference into free enterprise, but I think clamps have to be put on the banks. If they're borrowing at 4%, why do they have to sell mortgages at 7 or 8%? Why not 2% or 1%? So it's the banks that are making mortgages unaffordable and lending unaffordable because of the spread that they demand, for the return of their capital. And I think something needs to be essentially looked into. I think this is a big issue. So we don't talk about the banks. We look at Jamie Dimon at J.P. Morgan and how well run the bank is, which is the biggest bank, and how they're making money and their stock is up, and so forth and so on. But we don't criticize their lending practices and their ability, to multiply lend money above what deposits they have with the Fed, and it's like 8 or 9 times they can lend out whatever money they borrow from the Fed. The leverage is incredible for the banking industry. So, I think you need to audit the Fed. We might have to do something with the U.S. banks as well. So it's a multi-pronged problem, and I guess historically you can say, well, 6, 7, 8% for a mortgage here in the U.S. sounds high, but I remember back in 1980, the mortgages were 11, 12, 15% for mortgages going way back. So there are times where the rates have been much, much higher. So historically, it's high. It seems high to us because we were at that 0 or 1 or 2%. But going back, multi-decades, it really isn't. But in terms of the current economic situation and the political situation, I think we've got to reel in the banks a little bit until the Fed does something with the short-term rates. Now, remember, the short-term rates really don't control the mortgage rate. It's the long-term bonds. So if the Fed starts lowering interest rates, 0.25%, 0.5%, everybody gets all excited, and the stock market may or may go up, or probably go up. But that doesn't necessarily affect the bond market or the mortgage rates. It's a very complicated situation because you have a lot of players involved here. So it's not the answer. The real answer is, how's the economy doing? Is business doing well? If business is doing well, it could afford to pay higher rates, even though we don't like to see it. And, the anticipation of that is creating some interest in the building industry and the housing stocks, thinking that the Fed lowers rates. But again, it's a psychological thing. Unless the bond market cooperates, it doesn't mean all the rates are going to come down. So it's like I say, it's a very complicated situation. You got a lot of factors here, including the bond market. So we'll see how it all plays out, Jim. So I'm a little long-winded, but it's like everybody's looking at Powell this week, and we know he's going to be replaced. He's a lame duck. And the question is, Mohamed El-Arian, one of the leading economists, very famous, came out with a statement about a week or 10 days ago. I may have mentioned this last week. Thought it was good for Powell to step down. And the reason he said that was because, he said, all this controversy around the Fed and rates and Powell, the fact he may not be around next year, is sort of threatening the institution itself. And he was concerned, I'm not concerned. As far as I'm concerned, the U.S. Congress could abolish the Federal Reserve as much as it created it back in 1913. I'd be happy about that. But I think we need free markets deciding that, not a central bank. And the majority out there disagree with me, but they so mismanage things, I think they need to be removed, honestly. So, but anyway, his statement was, he should step down just to, lighten up the conflict that's going on right now, because we know he's going. We know the next Fed chairman's going to lower rates unless there's some other dramatic event where he can't do it. And, there has been talk in Congress for the last couple of years about revisiting the Fed and the original legislation. And eventually it may go. It's like anything else. It may go the way of the dodo at some point. I mean, it's made so many mistakes. The people in charge, the economists that run it, are really bad. And it's about the worst forecast you can get for the economy and the market comes from economists. So it's interesting times for the Fed now. So now we're going to have to wait till September to see what the Fed does. And everybody's going to be talking about that. So anyway, that's sort of the Fed story.
We'll have more with Mark Leibovit right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. Mark, what's going on in the crude market? Is it flat?
It's still bullish overall, and I'm still a bull, but, we're in this time frame for a pullback. We have, remember how September, October have historically sometimes created big sell-offs. There's some cycle work that says it could begin right now. In fact, we had end-of-the-month window dressing ending today, and I guess you could say it was yesterday as well. That's where money managers, come in and supposedly doctor up their portfolios to make them look interesting to their clients at the end of the quarter or the end of the month. And like one particular stock has been hot here the last few days, GE Novova, which is the one that's producing the nuclear power plants and so forth. And the stock exploded. It was a $300 stock, and now it's a $650 stock, and had a big run. It was up 80 points one day a few days ago. But anyway, the point is, it's a popular stock, and it's been holding up here and doing well the last few days. Why? Because the big name like that, it has to be in with every money manager, any respectable money manager's portfolio. Otherwise, the question is, why aren't you in the leading nuclear stock on the planet run by the biggest company in that business? So that's just one extreme example. But you get this end-of-the-month window dressing we just ended, and that applies to every stock, not just the GE stock that I'm referring to. So, we have a bit of an orgasm here, so to speak, in the market, and it may be due for a little bit of a pullback. There is a lot of stock buybacks that occur starting August 1st, too, so that could be an offset, a bullish offset to the negative that I just mentioned, but we are overall, really up there. We made a huge move from the April lows, and the chart still is an overall bullish chart, but, a nice shakeout, would make sense. We'll see if it unfolds. I wouldn't go out there and liquidate your whole portfolio, but if you're more sensitive to the market, you might want to wait a little bit and see what type of correction. And historically, we do get some type of correction here, and then, if you have to follow the playbook, you'd be a buyer in September, let's say, and for year-end rally. So a lot of this is contrary opinion as well. Too many people start saying it won't happen, or, you got to watch all the news and so forth. But the cycles and the charts sort of say, we're up there a little bit, and, might be a little extra careful here, just as you are in the gold market that we mentioned a few moments ago because of the strength in the U.S. dollar. A lot of cross currents, a lot of things happening here, and just a good time frame to maybe lay back a little bit and watch.
What's going on the cryptocurrency front?
Same thing. They're not correcting substantially. They're just churning back and forth. You look at Bitcoin. It's trading between 117,000 and 119,000 for days, and it has some support way under the market around 110,000. And I would be concerned if it took out 100. I don't think it's going to do that. And of course, I'm just giving you one example with the Bitcoin, but it's a similar situation. It's had a big run, and August is a good time to take a vacation, maybe for the markets and for Bitcoin as well here. So good long-term hold if you're in it, but the charts sort of say it could correct more here a little bit. So I would, unless you're dollar cost averaging and you have a fixed amount every month and you don't pay attention to the price, but if you are paying attention, there's a chance you might be able to do a little bit better here. So I'm still a bull. I have my VR blockchain letter. We're loaded up to the gills in, cryptos and various names, taking a bigger picture view. And a lot of this, could take months or through the course of this next 12 months or a year to really unfold. There's a lot of stuff that has to be worked out. A lot of things being talked about, treasuries and crypto and the connection with gold. And, it's an amazing scenario of a lot of things that are flying around here. So it's a sector you got to be in. And like I say, dollar cost averaging is not a bad idea because you can't pick the bottom or the top at any particular moment. But if you think the trend's up, which I think it is, based on all the research that I do and good contacts in the industry that give me their opinion and what the charts are saying, it makes sense that there's more coming to the upside. And, most people aren't in this market. A lot of talk about it, a lot of press, but the average person isn't. But the average person may become more familiar with this now with the passage of the Stablecoin Act, the Genius Act, because now you're having, as we discussed before, companies, and I guess the most recent glaring example was Walmart creating its own stable coin, which means it's tied to a fixed, like to the treasuries or to the bonds or to the U.S. dollar in a way that it can't fluctuate in value, and that all has to be worked out. So you may actually be transacting business with stable coins instead of a checkbook or a credit card or cash at some point with sort of the major, retailers and companies around the world. So I think that's going to orient people a little bit more to the digital currency world, which is unfolding. It's like, when the internet came along, in the 90s, it takes time for people to adjust to it. So this is not all happening overnight, but it's slowly moving in that direction.
And the White House is about to get bigger. President Trump announcing a $200 million state ballroom will be added to the East Wing. That's 900,000 or 90,000 square feet, room for about 650 people. The project to be finished by the end of his term.
Well, the Federal Reserve can spend, I think, several $1 billion to renovate and expand their operations. Certainly the White House can do that, so I'm all for that.
Well, it says it's going to be paid for by donations from President Trump and other people. So maybe taxpayers won't be on the hook, but we know how anything involving government can spiral.
Yeah, well, we are with the Fed expansion.
Yeah.
Federal Reserve its thing, but that's interesting. I didn't know that with Donald Trump. But, we just...
maybe we'll be invited.
You think so?
To trip the light fantastic, sure.
I mean, I have to buy a new suit to do that one, but I don't think I'm on the list, Jim. But in any event, I know I'm a big admirer of him and what he's done, and by the same token, I don't think I'm on the guest list. But it's interesting times here with the tariff stories every day, and with the economic reports, and we've talked about interest rates, and the market's been climbing, referring to backing up a little bit to the market, it's been climbing a wall of worry. Everybody's nervous about things, and, we have wars going on. We still have war, the Ukraine war and the Putin situation and the Mideast, and the involvement of China and the involvement of Korea and all the nonsense, and the Iranian negotiations. So there's still a lot of loose cannons out there, and the European Union is seems to be very warlike. They're talking about conscription to force young men to join their military. Talking about raising a lot of funds for arms, and it seems like they're preparing for a big world war, or preparing for some type of war. You can argue that the world war is already underway to a certain degree with what's going on everywhere, but so forgetting the financial markets and everything else, all this is ultimately tied to the geopolitical situation and how this all resolves. And, it doesn't look too good here. I mean, in one sense, the Iranian situation seems to be under control, but we really don't know if that's the case. And there's still issues with Israel and Gaza and getting the refugees out and deciding what's going to happen to protect Israel in the years ahead. And what's happening with Ukraine and Putin and the European Union backing, a war effort. Like I say, a lot of loose cannons out there, and at any moment, a lot of this, obviously could affect the market. So got to keep your ears and nose to the grindstone. Though you could argue over the decades, it seems like the stock market likes war, and that's a sad statement. But that's been the story of history, particularly with defense contractors and all the military expenditures and so forth. So, but this one could get out of hand. So let's keep our fingers crossed.
Mark, always fun chatting with you.
Same here. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as vrtrader.com. He was speaking to us from Arizona. If you have any questions for Mark or for any of our guests, you can send them to info@howstreet.com. We'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.